So what I'm going to do is I'm going to get started with trend lines. Why use trend lines? What's the importance of trend lines when you are trading? Now, trend lines are akin to your support and your resistance lines. You really shouldn't be trading without some form of support, resistance, or trend lines on your charts. Whether you're a scalper or a day trader or a swing trader, whatever kind of trader you are, the only way you'll really understand or the only way you'll be able to make those close to perfect entries and exits from your trades is by the use of your support, resistance, or trend lines. So for today, I'm going to focus on trend lines. And so in front of us here, I have a Bitcoin USD chart. I'm probably going to pick up this chart here where I drew some trend lines previously. I'll get rid of them. So here we have an XRP, excuse me. We have an XRP USDT chart. And the way trend lines work is that you really want to draw your trend lines whenever the market is trending. So they come in useful in an uptrending market, as we can see on this chart, or in a downtrending market. So with an uptrending market, because of course price is increasing over a period of time, and so but within that uptrend you still have those swing highs and swing lows. So if we look at this chart from this point, we can see all in all motion is upwards, but within that uptrend we still have it kind of oscillating, which is standard for prices. They breathe. Prices breathe. So we're having that up and down going on this whole time. Now, if you allow yourself to be fooled by the uptrend over 1, 2, 3, 4, 5, 6, 7 candlesticks, and then you enter into a position somewhere about this last candlestick, then of course you're going to hit a losing trade, because the next 3 candlesticks kind of switch to what we look at now as a temporary downtrend or a retracement. Especially as a day trader or a scalper, where you're in your trades for a relatively short time, you're trying to capture the uptrends, and you want to basically, you're making your profit on those short uptrends. Longer term traders would be happy to just stay in the trade for a longer period of time. That could be weeks, that could be years. But as day traders, we want to make that daily profit as much as possible. So what I'm going to do is I'm on TradingView, and I'm going to use this button here. Here we have these lines. I'm going to click on it and you can see the different lines, but the one I'm interested in for now is the trend line. So I'll click on trend line, and then within this uptrending section, I'm going to search for the swing highs. So the points at which within this uptrending period, the points at which we had the higher price action. And we can see right here, I'm going to take it from the top of this wick. I could take it from the top of this wick. No, so what I would do is actually I'll take it from the top of this wick. Let's do that. Let's go back, select the trend line from the top of this wick, and then we're going to drag it such that it's hitting as much of the top of this wick as we possibly can. So we're hitting as many swing highs as we possibly can. There we go. Now drawing trend lines is not an exact science. It's almost an art. And so, you know, there's never any really perfect trend line. So, but you just do your best to hit as many of the top points as you possibly can. So if I draw that trend line there, and then I can draw a second trend line. I can draw a second trend line and take it from here. Let's get our swing lows this time. Now we're trying to catch the swing lows. So again, we're looking for as many touches as we can get. I'm trying to get these upper candlesticks. Okay, so there I have two trend lines. So what's going on here now is within this period of price action. Now bear in mind, you probably would have drawn your trend lines earlier on whilst price action was trending, and we're assuming you're already in a trade. So you're in this trade and you're looking for an opportunity to get out of the trade. So you want to get out of the trade with profit. If you stay in the trade too long, any gains you've made from down here to here could be lost if you stay in the trade for the duration of this time. So the bottom trend line now acts as our floor or our support level. The top trend line is acting as our resistance for the duration of price action that we have in front of us. The minute price action drops below the bottom trend line, which is your support, you want to consider coming out of your trade. So we're not just looking for when price action drops below. I'll rephrase that. We're looking for a situation where a candlestick closes below the trend line. Then you want to begin to consider getting out of your trade. If we look at here, we have a situation where price action actually broke below the trend line, way below the trend line, but then it started working its way back up again. So in this situation where if I was in this trade, many times I'll look for two candlestick confirmations. So once this first candlestick breaks out below the support or the lower trend line, I'd be looking for that second candlestick. If the second candlestick, meaning this one, closes also below the trend line, I'm out of the trade. But as we can see here, we have this one closing below the trend line, and then we have this second one actually closing above the trend line. So in this situation, I would stay in the trade, and I would be in that trade another 5, 10, 15, 20 minutes. So I'd be in this trade 20 minutes. Then now this is it. We have two trend lines. We see a breakout above the resistance, which is a very good sign, because when there's a breakout above your upper ceiling, that's a very good sign. But in this case, it's more like a fake out. It looked like price action is trying to break above the upper trend line, but look at this second candlestick. It's a failed attempt. So the second candlestick comes all the way back in, but we're still within our trend lines. Now, it just depends on how risk averse you are or how pro risk you are. You could see this candlestick retrace back below the upper trend line and decide You want to keep your profits. Get out of the trade. Another trader who is more pro risk could want to maybe wait it out and see if the trend will continue back up. But then again, it's riskier because you've got this big candlestick showing you there's a lot of selling pressure. So at this top point here, there are a lot of sellers here, and they just sold, and this pushed the price back down again. So the price comes back down again. It almost comes down to the bottom trend line or the support, and it could be a good point again to exit. We see a bit of volatility going on now because with this next candlestick, firstly, it opened right at this point. It ran up again, broke out above the top trend line, which is a good sign. Again, at any of this point, you could exit the trade because you're looking at your P&L, your profit and loss. In this case, it's a profit, and you want to take it and run. The smartest traders are the ones who can take a profit or know when to take a profit and are quick to take their profits. Those are some of the smartest traders you have out there. For me, it took me a little while to, because you always have that greed factor. You're looking at your profit and loss, and you're looking at, $200 you're up, or 200%, or whatever it is. You've got to have a point at which you say, this, for every X percentage or every X amount of money, I'm going to exit this trade. So now in this third candlestick situation, you could take profit at any point at which the price actually ran up. But within the 5-minute period, what happened? Price ran down. There it is, running back down again to close pretty close to the bottom trend line. Again, this is another telltale sign to exit your trade. Now, this third red candlestick is the clincher because it has closed below the support or below the bottom trend line. You've got to get out of that trade. Of course, again, I emphasize that this is for short-term traders where you're looking to make your profit within a short period of time or within the period of a day. I classify myself as a day trader, and I'm usually looking to get my profits within the period of a day. I do, and I will sometimes swing my trades, but then that's for a different video series, like what would make me hold my positions to swing into the next day or into the next couple of days. This is how I use trend lines to inform my day-to-day trading. And another thing I want to show is I want to show this chart on a daily chart. So I'm going to get rid of these trend lines. And then I'm going to go to a daily. Actually, instead of going to a daily, I'll change charts completely here. And here I've pulled up a Bitcoin USD chart, far from it. But, so here we have the monthly chart. And so back in here, at this point, the top of this green candlestick, which was November of last year, November 1, price action broke above the previous high that Bitcoin had made in the previous 3.5 years. 3.5 years, yes. If you are buying and selling Bitcoin, and then we're going to pull our trend lines right here from our swing highs right there. Let's highlight that again. From our swing high right there, and pull that up and we've got 3 touches, so that's good. This will work. 3 touches there. And then we draw a lower trend line to touch our swing lows within this uptrend. So remember, a trend line works within a trend, an uptrend or a downtrend. We're not going to be drawing trend lines around this area here. where we have what we call consolidation. Price isn't doing much, it's going up, it's coming down over days, and that also is a healthy price action for after a huge trend. It's almost like the price needs to kind of take a breather and take a little break, and it actually strengthens the movement. And in the event that that price action is going to continue the trend, the upward trend in this case. So again, we'll highlight our trend line and draw our swing lows, and I will take it from this point. So I'll take my swing low from this point. There, that worked this time. And again, we'll see, you just kind of feel around. You want your trend line to, you want the price action to hit your trend line at as many points as possible. So up to this point, I get some touches, but then I see there's some movement in these last 3 candles up here. So what I'm going to do, I'm going to change my thought on this, where I'm drawing my trend line. And I'm going to take my trend line actually from this swing low. I feel like an artist drawing a landscape sometimes when I'm plotting my trend lines, because you're trying to kind of like figure out and see what's the best angle in which to draw it. Okay, so I think I've hit 3 wicks. Sometimes I will draw from the wicks, sometimes I will draw from the body, just depends. But right now, staying inside this trade would happen until we see this red candle up here. And this candlestick hasn't closed outside the bottom trend line yet. But look what happens with that second candlestick. It not just closes, it opens and closes below the trend line. You want to be out of that trade already. And this is the beauty of trend lines. So once you're out of that trade, again, you would draw trend lines at this downtrend, and drawing it at this downtrend again will inform you when next to actually enter back into your trade. And that's how you would constantly be in and out of your trades, with the hope that you're making profit. That is why we get in and out of trades. We want to make profit over a short period of time. So there's our upper trend line, and let's do our last trend line, and then I'll take your question. That's a nice support there, but we're drawing trend lines today, so let's keep it to trend lines. And then I would take it from, actually in this situation, I would like to draw a support level right at this point. So let me switch a bit. Let me draw a support level, because whenever I see a level, I use this, I can see a nice level right here. Yeah. Okay, so that's a level. And then let's do our second support line, our second trend line. There's another, and I will draw that from, we got a lot of wicks here, so I'll probably take it from the bodies and do something like this. You can see, guys, it's actually an art. There's no exact science to it. But the point is, again, we see in this downtrend, price action is zigzagging, but it's heading down, and you're looking for the opportunity to get back into your trade. You want to jump back into your trade, and what happens after that? Boom. And this is how we use trend lines to inform our daily short-term trading. I keep entering trades when I see the upper trend line, but then within minutes it reverses to a lower trend line. What am I doing wrong? So you keep entering a trade when you see the upper trend line. I'm not too sure about what you mean by seeing the upper trend line. The trend line is a line you are going to draw, and you're going to use that line to, like I've drawn these 2 lines now. I can see that on drawing the lines, taking it from the swing high points. So connecting all the swing highs with this trend line, upper trend line, and then connecting all the lower swing lows, it shows me the trend. And so, Mara, what you want to be doing is you're not okay. So maybe what you mean is at this point, when your price action breaks above the trend line, you're entering your trade. You're entering your trade, and then price action reverses, and before you know it, it's back within the trend line. Okay, so what I was saying some minutes ago is what I will usually do is I will wait for two candle confirmation. So when I'm trading, this is a daily chart, but when I'm trading, as a short-term trader, I'm always looking at my 1 minute and my 5 minute time intervals. You're drawing your trends on the higher time interval. So I'm not going to draw a trend on my 1 minute. I draw my trends on my 5 minute time intervals, but I'm looking at my 1 minute as well. And so what's going on is if price action breaks, say, above either one of my trends, whether it breaks above the lower trend for me to go into a trade, or it breaks above the upper trend, I'm not going to jump into that trade immediately. I'm going to wait for another candlestick. So in this situation, I wouldn't have gone in at the end of this trend, because you can look at that upper wick. What happened? Price action ran up and then it came back down again within the trend. Now, it coming back down again could have signified downward price action, and there you are in your trade at a loss. But if you wait for this second candlestick confirmation, most times, of course, there are no guarantees with trading. We just always try to increase our odds, increase the possibility of us making the right decision. So waiting for two candlesticks, I definitely would recommend. Hi, Awolola. And your question is, I keep entering trades once I see a bullish candlestick on a daily time frame. Is that a good idea? You keep entering trades once you see a bullish candlestick on a daily time frame. So let me go to, I am on a daily time frame. Okay, so let's assume a bullish candlestick. So I'm assuming, with a bullish candlestick, you're talking about a green candlestick. The thing with trading is we're never going to make any decision to enter or exit a trade on account of only one sign. We will use the one sign, and then we'll look for another one, another indicator, another pattern, something to confirm. And of course, the more signs or indicators you're looking for to confirm your forecast, because you're trying to forecast that price is going up or down, then the more indicators you use to confirm that thought, then the better is the likelihood that you will be right. So you're never going to enter into a trade on account of one bullish candle. And let me see, you said on a daily time frame. I don't enter trades on a daily candlestick. I will use my daily candlesticks, like this is a daily. I will use the combination of my daily or my bullish candlesticks to inform me of the trend. So once I see that the trend from all these bullish candlesticks are green, they're bullish, then I will go into my smaller time frames to look for a more precise entry. Because if we look at these bullish candlesticks, if I enter the trade, let me think. If I enter the trade at this point, because guys, bear in mind at this point where I have this dotted white line, horizontal dotted white line, the candlestick was a big green rectangular candlestick. But what happened is within the period of a day, price got to the top and then it retraced, it came back. If I buy at this point, I'm going to be buying at a loss, even though the candlestick on the daily is a green candlestick, which is why you always want to go down to your smaller time levels, because my smaller time level would inform me that, well, right now there's a retracement going on. It's not a good time to enter in to your trades. So it's not a good idea to enter in on a bullish daily candlestick. No. And I hope that answers your questions. And so that is really the importance of trend lines. Your trend lines, see your trend lines as like a navigation system. It kind of lets you know, if like, just like a good navigation system, it tells you the next thing to do. It lets you know that you're in the right direction or you're in the wrong direction. And so your trend lines just gives you that picture, so you always want to look at your higher time frames to inform you of the trend. And then you want to go down to your smaller time frames and to use them to actually get your entries like precision right. You just want to get it precise. You want to enter in at the lowest possible price, really, and then you want to exit at the highest. This is how we make a profit in our day-to-day trading. So that is it. If you have any more questions, put them in the chat right there. Pinned to the top of the chat box, I actually have a link to my Telegram group for those of you who may want to interact with me more, and not just with me. It's just a place where a lot of us like-minded traders gather together, and it's always good. I mean, with trading, you just don't want to be an island. You don't want to ever trade like an island. You always want to be in a body of like-minded traders, and this is how you kind of hone your experiences and you hone your skills. Okay. So Mara, you're saying, yeah, I'm right. Exactly what I did in my last 2 trades. I entered as soon as it broke above the trend line instead of waiting for confirmation. I appreciate. Yes. Have no fear, Mara. We've all done it. And another thing with trading is discipline, because sometimes even though I know to wait for my second candlestick confirmation on the 1 minute, sometimes I'll wait on the 2 minutes. And just depends on the nature of the trade. Sometimes I'll be waiting for a 15-minute confirmation. Just depends on what you're trying to do with your trades. But the minute I see green, sometimes you can forget all your rules, all your, the best way to do things, and get so carried away with the green. Green does something to me. I love green. Who doesn't love green? So when I see green, I have to remind myself, now wait on. So there's an aspect to it that whereby you kind of have to develop the skill to wait, to wait and not get excited and just hit that submit key before you know it, boom, you're in, and you don't want your trades reversing on you. So we've all been there, and I still struggle with it sometimes. I certainly do. There's what they call FOMO, FOMO, the fear of losing out. There's a tendency to feel, oh my goodness, if I don't jump on this now, I'm not going to, I'm going to lose out. So it's something that we just have to develop as traders over time, to learn to be disciplined enough to just wait, be calm and wait. My mentor used to say, if you don't get in on this trade, there's going to be other trades. You gotta kind of preach it to yourself constantly to make yourself believe it. So if there are any other questions, let me know. And if no other questions, then I'm just going to wrap it up for today. I want to thank you all for showing up. I really enjoy doing these live stream sessions, because somehow it's almost like when I do the sessions, it's almost like revising before a test. You know how when you have a test and you got to kind of revise and go over what you've learned over the past months or years, and then stuff comes back to you. And sometimes, I mean, that happens for me, going over some of these things in the live streaming session. So I'm actually finding it more beneficial than I thought, because I started the live stream wanting to create more interaction and to make opportunities for you, my subscribers, to actually ask me questions. So Saturdays, 10 a.m., the plan is to be here. So I'll see you this time next week, 10 a.m., be here. If you have any particular topics you'd want me to go over, of course, now is a good time to put it in that chat right there. And I will see you. I'll see you in my Telegram group. I will be putting out another video on Wednesday, so stay posted and enjoy the rest of your weekend.